Good morning, students. A very good morning to all of you. And I'm C. Ankit Sharma, your faculty for our fourth session of Salary Chapter. So again, I believe that you all are actually studying very hard to achieve your goal, which is to be a chartered accountant as soon as possible. So good morning, Suprabhat, Namaskar, Subha Bakhair, Sat Sri Akal, Kem Cho, Vadakkam, Kasakai, etc., etc., etc. So a lot of good morning wishes has been come from Parth Rana, Kemcho, okay, Majama. Divya Kumari, good morning. Kadambri, good morning. Komal, good morning, etc. So we have a lot of provision to cover today. Today we are in our fourth session of salary chapter, in which we will cover generally the provision for different kind of perquisites. In the last class, we discussed the perquisite, and now today we will start from medical facility perquisite. Before starting the class, here is the thought for the day as usual. And this is a very powerful thought, and we all know that, of course. I believe you all know this quotation, or you read this quotation before also, and this is Sri Swami Vivekanand ji. We all know he is a brilliant scholar and a very great personality of our country. And he said, "Arise, awake, stop not, till the goal is reached." That means arise. Arise doesn't mean that you are sleeping and you need to wake up literally. Arise means you have to arise to achieve your goal. You should understand that in this life you have a certain goals and you have to work hard to reach that goal. That is the meaning of arise. Awake, you should focus on certain things in your life and you need to avoid the distraction which are actually a hurdle into your success. So awake, you should understand what is important in your life and what is not important in life. So you need to avoid those things. Those are not important in our life. And stop not. Work hard continuously. Later or sooner, you will achieve your goal. Do not disheartened if you are failed. Do not depressed if you are not able to clear or achieve your goal soon. But you have to achieve your goal. And till that, you should not take any rest. You have to stop not till the goal is reached. So very powerful quotation. And for our course, which you are doing actually charting content course, this is really important that you should arise, awake, and stop not. This course need your dedication, your focus, your time, and your definitely sacrifice. So until you reach your goal, you should work hard to achieve that goal. So let's moving on to our today's slide. And today we will start with some provision, a question in our study material on page number 3.52 regarding the retrenchment compensation. We discussed the concept of retrenchment compensation in our last session. That was voluntary retirement scheme. This is the illustration number 9, which is on page number 3.52. So we need to discuss this illustration and then we will move on. So Mr. Datta received voluntary retirement compensation of 7 lakh after 30 years, 4 months of service. He still has 6 years of service left. At the time of voluntary retirement, he was drawing basic salary rupees 20,000 per month, DNS allowance, which forms part of pay rupees 5,000 per month. Compute his salary taxable voluntary retirement compensation, assuming that he does not claim any relief under Section 89. So what is Section 89? That is going to be discussed later. That is regarding relief, and that will be our last topic in salary chapter. So do not consider Section 89 as the question says, and without considering Section 89 provision, we need to find out the taxable VRS. For calculating the taxable VRS, we have seen in the provision. Let me remind you the provision, so it will be really easy to you to understand the concept and the numerical topic. So in the compensation part, the last compensation was like VRS, voluntary retirement scheme. So one was retrenchment and this was the provision regarding VRS. So we have to calculate 4 amount. First one was actual amount received, which has been given in the illustration, that is rupees 7 lakh. So in our question, the assessee, the employee received 7 lakh rupees as VRS. So first point was rupees 7 lakh. This is simple. Then 5 lakh is the fixed government limit. So in our numerical, the 5 lakh rupees is the fixed limit, which is always remain the same. The third point says 3 multiplied by monthly salary, which will include basic salary, DA terms, and percentage commission of sale of last month and multiplied by the complete year of service. So in our question, 3 complete year of service is 30 years, and we just need to take the monthly salary, like these 3 amount of last month. In the question, basic salary has been given 20,000 and DA as per terms has been given 5,000. So our monthly salary will 25,000 rupees. In the last question, the calculation will be 22 lakh and 50,000 rupees. So as per the formula, we put the value monthly salary, that is 25,000, and the complete year of service is given in question is 30 years. So this value will come 22 lakh and 50,000. Now the last point says salary drawn last month as above, that means 25,000, and balance month of service left. So in the question it has been given that 6 years service has been left, 6 years. So we will convert the 6 years into months. That will come 72 months service left. So this amount will come 18 lakh. So we can see out of these 4 amount, 5 lakh is the minimum amount which is going to be exempted. So the taxable value will be always received minus exempted. That will come 2 lakh rupees. I have said that I will solve each question of your study material and test your knowledge also. So that is the solution, and the taxable value will be 2 lakh rupees. So you can see the taxable value is 2 lakh rupees and all the provisions has been same as we discussed in the question just. So today we will have a MCQ test also. I will take that MCQ test before our break session. Okay, so you should have your paper, pen and calculator before our break session. That will be around 8:30. Okay. So good morning's wishes has been continuously coming from Kadambri. Good morning. Prajapati, good morning. Ramnivas, Ekta, Swati, Hardik, Sonia, Alma, Sheikh, Swati, Rehan, everybody has a very, very warm good morning to all of you. Vanakkam is Gayatri. You must be from South. Vanakkam. And Mohammed asking, how are you, sir? I am not quite well due to this pollution and change of weather, a little throat infection, but it's okay. Okay, so correct. So all good morning wishes has been come. Now we are moving on to our next provision. So we were discussing the provision regarding LTC, leave travel concession. And a question has been also given regarding this topic in the study material. So before starting today's provision, I will take that question, and that is on page number 3.64 of your study material, illustration number 11. We are going to discuss illustration number 11. There is illustration number 10 also. We skipped it because that is regarding the provision regarding TP provision, the discussion we had taken. I will also solve that provision which we discussed in the last class regarding the one of the most difficult provisions of the salary, as I said. Okay. So that is illustration number 10. So we just skipped it. We will take that provision also in today's class. But before that, we are taking the provision of LTC, leave travel concession. On page number 3.63. It's a very simple question, very easy. And I guess it has been asked in the examination also. So it says, Mr. D went on a holiday and on 25th December 2023 to Delhi with his wife and 3 children. One son age 5 years and twin daughters age 3 years. So you should understand, because in the question it has been said that one son age 5 years and twin daughters age 3 years. So that means First, the single child has been taken birth, and after that, the twins take birth. So in this situation, the both twin daughters can have the exemption because single child birth before the birth of twins. They went by flight economy class, and the total cost of ticket reimbursed by his employer was 60,000. 45,000 for adults and 15,000 for three minor child, 5,000 each for three minor childs. So they are asking the LTC exemption. So in this scenario, of course, all three children can take the exemption because the single child has been born before the birth of twins. So all three child can take exemption. So there will be no taxability regarding the LTC provision. So there is nothing to solve. They just in the solution we just need to tell this thing in theoretical provision. So there is no taxability regarding the children. But the question changed, and now it's illustration number 12. In the above illustration 11, will there be any difference if among his three children, the twins were 5-year-old and son is 3 years old? Yes, because in this situation, twins born before the birth of single child. So I told you in the last class that if the twins has taken birth before the single child, then the limit has been exhausted on the birth of twins child. So that single child will be counted as third children in this scenario. And the exemption can be claimed maximum for two children born on or after 1st October 1998. So in this scenario, one children exemption cannot be claimed. So total ticket value was 15,000 for three children. So for a single child, it will be 5,000. And this 5,000 is going to be taxable. Balance 55,000 will be our exemption for LTC. So this question has been asked in the examination, in the previous examination. Okay. Now moving on to our today's provision, and that is medical facility. I believe that you must have downloaded the notes. I have uploaded the chart presentation also. And if any one of you have gone through the chart I uploaded regarding the pension provision, regarding the gratuity, etc., etc., I personally believe that must help you a lot in revising the provisions of salary. And as always said, that please, before the day of our lecture, you should revise the provisions, the previous provision we have taken into the class. That is really help you to understand the provision very fast and very clearly. Okay. Excuse me. Okay. Still good morning wishes are here, of course. Tushar is asking how to present numerical answer. Is there any format to present numerical problems? I have explained in the last class also, whenever you will solve any question on income tax, you should write that computation of that facility or income in the hands of Mr. Assassi for the assessment year. You should you should write it down initially, and then you solve the question in a way that it should be automatically self-explained to the examiner. So there is a specific format. You can see the example solved by an institute. On the basis of that, you can write your solution also. Okay. Mr. Malipathy Chinmay Venkatasai is asking, good morning, sir. I have a doubt that whether we have to follow your way of writing for calculating exemption or institute material, sir, in writing exemption. Both are same. There's nothing difference. Institute and we are actually following the Income Tax Act. So we cannot change that. It is just more or less there's something in the institute study material is explained in detail. And when I provide my notes and I solve the question, it is in short mode. So you can apply the provision regarding as per my either my concept or institute, they both are finally give the same answer. So it just institute is trying to explain you everything in detail. So you should understand. And this my way is just write it down the numerical topic. The numerical value, we need to find it out. They both are same. You should follow the institute method. That will really help you to understand the provision in detail also. So we are now on a medical facility. So medical is like a health issue, and for which if you are getting any facility from your employer, that are generally a lot of exemption regarding that. So we are understanding the provision one by one regarding the medical facility, and it says following are not taxable in the hands of employee. This is regarding our point number 13 from the above table regarding valuation of medical facility, and it says as per proviso to section 17(2), there are certain medical facilities, there are certain medical benefits, there are certain medical amenities, there are certain medical perquisites. Those are not going to be taxable. And those list has been given as follows. First is medical facility provided in a hospital or clinic, etc., maintained by employer. So if your employer is maintained a hospital and in which you are getting a medical facility, in that case, if payment has been made by employer, that is not going to be a perquisite in your hand. For example, you are working in a Vedanta hospital, and in case of some illness, your employer says that we will bear your all medical expenses and you should get admitted into our hospital. In that situation, the payment made by the employer is not a taxable perquisite. Clear? So we should understand that if the hospital is maintained by employer, in that case, medical facility is not a taxable perquisite. Reimbursement of expenses incurred by employee on medical treatment, where in the government hospital. Now understand, if employee take a medical facility in any government hospital, which is approved by government, and the expenses incurred has been reimbursed by the employer, it's a kind of a perquisite. In that case also, that is not going to be taxable. So if it is approved hospital by government, not going to be taxable. In respect of prescribed disease in any hospital approved by chief commissioner or principal chief commissioner, not going to be taxable. Next, in respect of any illness relating to COVID-19 subject to the condition notified by the central government, that is also not taxable. Payment by the employer for treatment in a government hospital, that is not going to be taxable. Payment by an employer for treatment of prescribed disease in any hospital approved by the principal chief commissioner, that is not going to be taxable. These are the same points, of course. So till now, we have understood that if the hospital is maintained by employer, there is not a taxable perquisite. If the hospital is government hospital, approved by government, not taxable. If the hospital approved by commissioner, then in case of prescribed diseases, that is not a taxable perquisite. So three provisions we have, and of course, the COVID-related provision also. If expenses regarding COVID-19 and a specific condition has been notified, then also it is not taxable. What are the specific condition? It is given over here. You can read it. Okay. So next, premium paid to affect an insurance on the health of employee. So if your employer is paying health insurance premium for you, in that situation, that is also not a taxable perquisite. Reimbursement of premium paid to affect an insurance on the health of employee or for the family of an employee. So again, if the health insurance for the purpose of family members also is paid by your employer, again, that is not a taxable perquisite. Reimbursement of expense incurred by employee on medical incurred by the employee, it has been written twice, on medical treatment from any private doctor is full taxable. So this is important. So till now we were discussing what is exempted medical facility. We have government hospital exemption, we have commissioner approved hospital, we have COVID-19 expenditure exemption, we have employer maintained expenditure, hospital expenditure exempted. We have health insurance premium paid by employer exempted. But if you are taking treatment in any private doctor or private hospital, and if it is reimbursed by the employer, then that is going to be your taxable perquisite. There's full 100% taxable perquisite. Now the point number 6 is saying any expenditure incurred by employer on medical treatment outside India and travel and stay abroad of employee and one attendant. Let me explain you in detail. So if we are talking about the medical facility, if we are talking about the medical facility perquisite, Then we have certain exemption. First, we just discuss if hospital owned or maintained by employer, that is going to be exempted. If it's a government hospital approved by government or approved by commissioner, then exemption including COVID-19 and specified diseases. If it is a medical insurance premium paid by employer for employee or his family member, still that premium is not a taxable perquisite. I have already discussed that if it is a life insurance premium paid by employer, then it is going to be a taxable perquisite. But medical insurance, health insurance, accidental insurance policy, that is not going to be taxable. Then private hospital or doctor, reimbursement of expenditure is 100% taxable. Now suppose if employee wants a treatment outside India, an employer says, yes, we will reimburse your expenditure regarding the medical facility outside India. So employer is ready to reimburse. In that situation, it says that the medical treatment expenditure which has been incurred regarding the patient and travel expenditure, because in this situation, travel expenditure of patient plus one attendant, because of course the patient cannot go alone for treatment outside India. So the expenditure which has been reimbursed by employer upon medical treatment of patient only, and the travel expenditure of patient plus one attendant, and stay expenditure, stay outside India expenditure for patient and one attendant. So these three expenditure will be exempted up to RBI limit. That will be given in question. So for example, travel expenditure is 1 lakh rupees, but RBI approved 80,000. So in that case, 80,000 will be exempted, balance 20,000 will be taxable. Stay expenditure is 2 lakh rupees, RBI approved only 1,50,000. Then only 150 will be exempt, balance is going to be taxable. But there is a special provision has been made in this scenario. That's a normal provision. A special provision regarding this expenditure has been made, and it says that if in this case, after exempted the medical facility as per this provision, if the GTI, the gross total income, I guess the gross salary, just a second. Gross total income, correct. So if the employee gross total income exceeding 2 lakh rupees, then the travel expenditure which has been exempted, the travel expenditure which has been exempted is going to be taxable again. And if GTI does not exceed 2 lakh rupees, in that case, that will be your answer. Travel expenditure will remain exempted. So that's a quite confusing provision. Let me give you an example that will be really easy for you to understand the concept. For example, medical facility travel expenditure in the question has been given 1,05,000. RBI limit permit 1 lakh rupees expenditure. So the taxable expenditure is 5,000 regarding traveling. Clear? Stay expenditure has been given 2 lakh rupees. RBI permit 1,80,000. So that is going to be taxable 20,000. The treatment expenditure Suppose 1,60,000 and RBI exempted the full value. So that is nil taxable. So this is the normal provision, but now suppose question says, suppose A part, his GTI excluding the above taxability, his GTI excluding the above taxability, excluding the above medical perquisite taxability comes to 1,80,000. Then calculate his GTI and taxable medical perquisite. So in this scenario, the medical perquisite taxability is 25,000. And the question says this GTI 180 is excluding the above treatment. So when we will include this 25,000 taxable value in our GTI, that will come 2,05,000. And if GTI exceed 2 lakh rupees, then the travel perquisite which has been exempted, the travel perquisite which has been exempted is again going to be taxable. So now 1 lakh is going to be taxable. So my GTI will become 3,05,000. That will be answer. And what is the medical taxable perquisite? Because it was 25,000 earlier. Now the medical taxable perquisite will be 25,000 plus 1 lakh. So if question asks what is the medical perquisite taxable in this case? Earlier it was 25,000, but because now 1 lakh is going to be taxable. So medical taxable perquisite will be now 1,25,000. And in the question asking the GTI, it will be 3,05,000. Suppose the GTI excluding is given 1,60,000. In this case also, we will include this 25,000 and now it will be 1,85,000. And now it is because less than 2 lakh rupees. So there is no travel perquisite going to be taxable again. So now the GTI will remain 1,85,000. And if the question asks what is the medical perquisite taxable value, that will remain only 25,000. Understood? So this is the main provision in medical facility. In my personal opinion, a question can be framed on this particular point of medical perquisite, which is regarding the medical facility available outside India. This is the provision which says medical treatment outside India, travel and stay abroad of employee and one attendant. However, the expenditure on travel will be taxable if the GTI before including such expense exceeding 2 lakh rupees. This is the very important concept of medical facility perquisite. The perquisite element in respect of expenditure on medical treatment and stay abroad will exempt to the extent permitted by the RBI. Medical facility to employee and member to his family includes spouse, children, dependent, independent, married, unmarried, but dependent parents, brother, sister in all the above cases. Hospital includes a dispensary or a clinic or a nursing home. Payment of premium on personal accident insurance policies. Again, I have told you life insurance premium is taxable. Other than life insurance like medical, health and accidental insurance policy premium, if paid by employer, that is going to be exempted perquisite. So we have completed the medical perquisite provision and now we will solve a question regarding it, which has been given in our study material regarding the medical facility. So it will give you more clarity regarding the provision. That is our illustration number 13. Page number 3.67. And we have to find out what medical perquisite is going to be taxable or exempted as per the given scenario. So compute the taxable value of the perquisite in respect of medical facilities received by Mr. G from his employer during the previous year 23-24. So medical premium paid for insurance of health of Mr. G. That is a medical insurance premium. And we have seen that any medical insurance premium, health insurance premium or accidental is exempt. So this is not going to be a taxable perquisite. That is an exempted perquisite. Clear? Next, treatment of treatment of Mr. G by his family doctor. So family doctor is a private doctor, and I've told you this is going to be taxable. Treatment of Mrs. G. Mrs. G is comes in the definition of family and in a government hospital. So that is not going to be a taxable perquisite, again exempted. Mr. G's grandfather in a private clinic. So grandfather also does not include in the definition of family, as well as that has been done in a private clinic. But even if still it is in a government hospital, that is again going to be taxable, as grandfather does not include in the definition of family for the purpose of medical perquisite. Treatment of G's mother, 68 years and dependent by family doctor. Again, it has been done by a family doctor. That is a private doctor sort of provision. Again, this is going to be taxable. Treatment of Mr. G's sister, dependent. So, sister dependent upon us is included in the definition of family, but it is in a nursing home. That means it's a private structure. That is again going to be taxable. So, you have to also check that either that person is included in the definition of family, and then you have to see whether it's in a government hospital, it's a private hospital, maintained by employer, etc. G's brother, and because he's independent, so in that case also this is going to be taxable perquisite. Treatment of G's father, 75-year and dependent, and the treatment has been done in abroad. 50,000, that can be included for the purpose of exemption. We have to see what is the RBI specific limit. Expenses of staying abroad of the patient has been given 30,000. So total expenditure is 80,000. And limit is specified by RBI is 75,000. So in that case, 75,000 will be exempted and balance 5,000 will be taxable. So that is the solution. We can see the solution. It has been given. One by one, the provision has been given. You can read it out from these provisions also. Exactly the same provision has been provided over here. Clear? Moving on to our notes, medical facility perquisite has been covered. Now the point C, perquisite taxable only in the hands of a specified employee. So all monetary obligation of employee which is discharged by the employer is perquisite in the hands of all employees as per section 72. But for the purpose of salary provision, employee has been defined, or we can say differentiated into two categories. One is specified employees and the other is non-specified employee. So who will be a specified employee and who will be a non-specified employee? The definition has been given over here. So if any employee means any of the three of one following condition. So we have already three conditions. And if any employee fulfill any of these three conditions, he or she will be called a specified employee. And if, of course, they do not fulfill any of these three conditions, they will be called a non-specified employee. So, first condition, employee and director of the company. So, if you are an employee as well as the director of a company of that organization in which you are working, so you will be called a specified employee. Specified employee generally denotes those employees. Those have some extra power in comparative to a normal employee. So does all employees also the director of a company? No. So if there is any employee who is also a director of a company, so he's a special employee. And that special employee, of course, is called a specified employee. Clear? Second, employee who has substantial interest in the company. So the concept of substantial interest, the definition of substantial interest under section 232, you must have gone through in the provision of basic concept in which this definition you must have gone through. That is substantial interest of in a company or in any organization. So it says if you have 20% or more voting power in a company, that is comes with the equity shares. So if you have technically having 20% or more voting power in a company and you are also an employee of that company, in this case, you will be a special employee because you have 20% or more voting power in that company. So if you are that employee, you'll also be treated as a specified employee. And the last case is very simple. And I guess maximum employee, or we can say most of the employee, will be a specified employee under income tax due to this third condition, because 99% employee is going to fulfill the third condition. The condition number 1 and 2 is difficult, but third is very simple, which says those employee whose monetary salary is exceeding 50,000 during the previous year. If any employee whose monetary salary yearly, 50,000 not per month, yearly, is exceeding 50,000 from one or more employer, that person will be treated as a specified employee in the organization. So 50,000 per annum means like 4,500 rupees, even if somebody has earning 4,500 rupees or 4,200 rupees, still he or she will be called a specified employee. So technically, all employee technically is specified employee, but you have to check this condition in the examination. So if your monetary salary is exceeding 50,000 during the previous year from one or more employer, you will be a specified employee. How to calculate that monetary salary? The format has been given. You should take the monetary payments in the initial format of salary part 1. I have provided you a format in which there is M, 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 M and NM also given. So all those M gross total will be your monetary payments. So you have seen that. You can see that basic salary need to take. Then all monetary payments taxable portion, all monetary payments, whether it's bonus, commission, dearness allowance, taxable portion of all allowances, etc. That will be called gross salary. Then we have to deduct the deductions under section 16. That is deduction number 1. That is under both regime. We have 50,000 rupees deduction, standard deduction. That will be discussed later. Then 16.2, that is regarding entertainment allowance deduction and professional tax deduction. So out of those monetary gross total value, we need to deduct standard deduction and these two deductions also. What are these three deductions? The detail has been given in the last of this chapter. So after deducting these deduction, if your monetary salary, this value is exceeding 50,000, then you will be called a specified employee. Okay. Now the valuation of perquisite. So these are the perquisite we need to complete. And then if we are able to complete these perquisite, that means we almost cover 90% of our salary topic. We are almost going to finish our 90% part of salary topic. Clear? So valuation of perquisite, one by one, we will discuss rent-free house. It's a very important perquisite. I personally believe that if the question is coming from this chapter regarding a salary calculation, then it must include rent-free house and the second point also, that is motor car perquisite. So we have rent-free house, motor car, other automotive, valuation of benefit of provision of domestic servants, etc. Valuation of gas, water, electricity, etc. So one by one, we are going to discuss these perquisite. First one and the most important is rent-free accommodation. Rent-free house perquisite, valuation of residential accommodation. We are going to discuss the provision regarding this perquisite. So what exactly happens when you join a company or an organization? So they may have a provision regarding they want to reimburse the residential accommodation which has been used by you. So for that purpose, they can provide you one allowance, that is house rent allowance. So they either can provide you house rent allowance. The provision of house rent allowance we have discussed earlier. So in the house rent allowance, the employer is going to provide you monetary value. And you need to find a house where you want to live. But that is allowance. In case of perquisite, employer is not going to provide you any monetary payment, but they are going to provide you an accommodation. They are going to provide you a flat or a house or etc. That you should go there and you can stay in that particular accommodation, and we will reimburse the rent, or you need not to pay any rent. This is company's structure. You can live it free over there. So that is a kind of facility in which you are actually going to have a property in which you need to stay. And in that situation, organization is not going to pay you any monetary payment. They will provide you a accommodation. You have to live there and just forget about the rent provision. Either company own that house, so you or company need not to pay any rent, or maybe company provide rent or pay rent to the landlord directly. You need not to bother about it. Clear? So there's a very important provision regarding the rent-free house. Multiple cases of rent-free house is there. So I am going to make you understand these provision with the help of a diagram or chart. That is a rent-free house provision we are going to discuss. In the rent-free house provision, there are concept of first one, unfurnished rent-free house. The employer has provided you a unfurnished rent-free house. Unfurnished means the furniture, etc., you should take by yourself. The employer is going to provide you only a flat or a house. No furniture will be provided by the employer. The second case is furnished rent-free house. The third case is hotel stay. Hotel stay. Temporary, of course. And this is, last is more than 2 rent-free house at the same time. So we have technically 4 provision regarding rent-free house. One is unfurnished, then furnished, then a temporary hotel room stay as a rent-free house. And then if you are having more than 1 residential house, that means 2 or more residential house, rent-free house at the same time. In case of unfurnished rent-free house, again there is 2 situations. Either you are a government employee. In case of government employee, the solution is very easy. The taxable value as per, we can say, government rules, or we can say license fees that will be given in question, or rent as per government specified or question specified. Clear? So in this scenario, the government employee case, in the question it will be given that the rental value or a license fee is 2,000 rupees per month. So if you occupied the rent-free house for the whole year, then 2,000 into 12, that is your taxable value. So this is easy. I doubt this kind of provision will be asked in question. So if I say, in my opinion, it is very simple. That does not mean that I am saying that you should not going to learn it. That is not come in examination. Anything can be asked in the examination. So if I say that this is not that important, it does not mean that I am saying, student, do not read it. No, you have to learn it again with the same intensity. But it's my opinion that generally the question regarding this does not come in the question, does not asked in the question, but it can be asked. Okay. So in case of government employee, the provision is very simple. The license fee will be given in question, and that will be your taxable value. In case of other than government, there is again 2 situations. Either the rent rent-free house, the house will be owned by the employer. The house provided to you might be owned by the employer. So if the house is owned by the employer, in that situation, there is 3 more conditions. One of these conditions will be applicable. Okay. So it says if the population of the city in which house is provided to you, the rent-free house provided to you, if the population of that city exceeding 25 lakh, the population will be given in the question. But of course, if the question says you get a rent-free house in Delhi, Kolkata, Chennai, of course, in that scenario, the population will be automatically more than 25 lakh rupees. So you cannot assume that the question that the population has not been given. So if the metro city is there, or almost all the city will having population is more than 25 lakh peoples now. So in the question it will be given, but if the metro city has been given, then you should also automatically consider that the population exceeding 25 lakh, and you can write out the note also regarding this. Fine. So if the population is exceeding 25 lakh, then the taxable value will be 15% of salary. Simple. Salary for that time period during which house is occupied. So if you have been given the rent-free house by the company for 7 months, then we will take the 7-month salary 15%. If the house is provided for full year, in that situation, we will take the 15% of full year salary. Easy. If the population is more than 10 lakh, but up to 25 lakh, then the percentage will just change up to 10% of salary. Simple. And if any other case, that means the population is up to 10 lakh. In that case, it will be 7.5% of salary. So you can see it's so simple, so simple. We just need to find out the population, and the percentage is very simple. That is 15%, either 10% of salary or 7.5% of salary. If house is not owned by the employer, that means house has been taken by the employer on lease or rent. So employer has taken a house on lease or rent and asked the employee that you should go there and stay. You need not to bother to pay any rent. So in that situation, if in the question has been given, listen carefully, if in the question has been given that house is provided by employer to employee, listen me carefully. If the house is provided by employer to employee, and the market rent of the house is 10,000 per month, or the fair rent of the house is 10,000 per month, or market value of rent of the house is 10,000 per month. In that case, we are talking about this case, not this. For the purpose of second case, there must be given in question that rent paid by employer so much amount, rent paid by employer. If the question only says fair rent, market rent, etc., that means we are talking about case number 1, owned by employer. So if in the question it has been specifically given that rent paid by employer, then we will assume that is case number this. So if the house is on lease or rent, then the taxable value is same, population is irrelevant, it's 15% of salary, or rent paid by employer. That's why there is no word like market rent, fair rent. It should be paid by employer, whichever is lower. That is your taxable value. We will solve numerical provision regarding this. Then you will find out that is a very simple provision. The main problem in the rent-free house calculation is salary. We did not discuss the meaning of salary. It's not as per gratuity C case. No. This salary having a different meaning. So if you are able to find out the correct salary, then you are really able to find the correct answer of your taxable value of rent-free house, because it just that we need to find out the 15, 10 or 7.5%. So if we are able to find that, there will be solution. What is the meaning of salary? That we will discuss. Now, furnished rent-free house treatment. So if you are having a furnished rent-free house, that means we having a rent-free house plus furniture. That means furnished. Simple. So either it's a unfurnished house, we have to calculate the taxable value of rent-free unfurnished house. And if the question says it's a furnished house, even then we have to find out first the taxable value of unfurnished rent-free house. And just we need to add the value of furniture. So in both situations, whether there is an unfurnished house or furnished, we have to find out the taxable value of unfurnished house in both cases. So if it is an unfurnished house only, then my answer will be the value as per the unfurnished provision. But if that is a furnished house, then we have to find out the unfurnished house value. How we will find out the taxable value of unfurnished house? If it is in government employee case, then as per government rules like license fee, etc. And if it is other case, then as the provision we just discussed about the other case. So there is no specific provision, no new provision. So if it is in government employee, we will take this taxable value as the value of unfurnished house. If that is other than government case, then depends upon owned or rental. That value will be my taxable value of unfurnished house. So for the purpose of furnished house value, first of all, we have to find out the value of unfurnished house, and we just need to add this furniture value. In the question, furniture value will be given that employer has also provided 1 lakh rupees furniture or 20,000 rupees furniture. That value will be given in question. But if furniture which has been given by employer is owned by employer, in that case 10% per annum of original cost of furniture will be the taxable value in both cases. Whether you are a government employee or not, does not matter. 10% per annum of original cost, not the WDV. The original cost of that asset which has been provided by employer will be added into this above value. And if furniture is also not owned by employer, if furniture is also on hire or on rent, employer also provide the furniture which has been not owned by the employer. Employer brings that furniture on rent, like air condition, TV, fridge, etc., any home appliances, and provide it to the employee. In that situation, the rental value will be the taxable value. Do not worry. You might be thinking this is again very complicated. I promise when we will solve the question, you will find out that this is really, really easy provision. The problem in this rent-free house, there's a multiple cases like government, then other having owned, on lease, owned have 3 population category. Then we are moved on to furniture value provision. Then we have to cover the hotel rent-free house concept. And then when we have multiple rent-free house at the same time. So till now it's clear. You can see this in a single sheet. This is the provision. If you have unfurnished rent-free house, then government taxable value. Other case, the taxable value. Furniture value we need to add will be given in question, that is owned by employer. Then we have to add 10% of original cost. And if it is on rent, then rental value. Remember, if in the question it says that 1 lakh rupees cost furniture has been provided from 1st November 2023. Then it's 10% per annum. So if it is provided from 1st November, that means for 5 months calculation. So in that case, we have to solve it like this: 1 lakh into 10% into 5 upon 12. That will be my value. So this is very important. In an examination and the question, the teacher might not provided that the furniture is for full year. So maybe rent-free house has been provided for full year. So this rent-free house taxable value, we need to take for the full year salary value, 10%, 7.5 or 15. But might be furniture has not been provided for full year. It has been provided from some date like November, October, July, August, anything. Then we have to take only for those months in that year for which we technically receive the furniture from our employer. Even if in the question says that furniture has been provided from 1st December 2023 on rent, 3,000 rupees per month. Then we have to take 4 months rental value and need to add that rental value in our furniture taxable perquisite. I hope it's clear. So we have discussed the provision regarding unfurnished and the provision regarding furnished. We have left with the provision of hotel room, rent-free house, and more than two residential, more than not, it's 2 or more residential rent-free house at the same time. It's not more than 2. This should be 2 or more. Clear? Or we write it down. 2 or more rent-free house, same time. Why it happened, how it happened, what is the taxable treatment, we are going to discuss. First of all, let me take the queries for today. Okay, Hari Singh saying, good morning, sir. I am from Sultanpur, Uttar Pradesh. Very good to hear that. Okay. Miss Satyam, sir, I could not find any class schedule for the month of November. Sir, are they available or when will it be available? I guess there will be schedule on the portal. You should find it out. But yes, I have class till 5th of December. We have class for today on 7th. Then we have a class day after tomorrow. That is 9th of November. And then we will start on 14th November, etc., etc. So there is a specific schedule. You should find it out on the portal. You will get it. Mansi Gupta, sir, today is my first lecture. Welcome, Mansi. But I advise you that please go through the previous classes to understand the concept more clearly. Fine. Niharika saying, is the COVID-19 provision still relevant? Whatever has been given in the act is relevant till the act is going to remove it. So for the purpose of examination, of course, they can ask this kind of question also. Next is Shri Nivasan asking, sir, medical facility paid for personal expense should be classified as a specified employee at taxable, right? The medical facility is going to be taxable because it's a taxable perquisite because it's for personal benefit. But those are exempted what we have gone through in the provision of medical facility. What is reimbursement? I have explained it. If you are going to incur any expenditure and employer is going to pay it thereafter, it is called reimbursement. So these kind of things you can search on Google also. Somebody was asking me from in last class, I guess, regarding some allowances for High Court and Supreme Court judges. That is some Paper-3A allowance, I guess. So might be I asked that student also that you should go and search the Google. So that student has searched the Google. As I asked you, what is the meaning of some Paper-3A allowance? You have gone through the Google. Who student was that? If you are here, you kindly message me and let me know that you have searched on Google the meaning of that specific allowance you are asking regarding that. If you did not, I'll explain you. Okay. What is one attendant? If patient is going outside India, so obvious it's really difficult that a patient can travel himself. So there must be one attendant. So I can give you an example, live example regarding this. Like Yuvraj Singh, the famous cricketer, we all know the Yuvraj Singh, he has been gone through cancer after 2011 World Cup. he has going for a cancer treatment, and he as the employee of BCCI. So BCCI as an employer reimburse all the expenditure on his medical treatment, and the medical treatment has been taken by him outside India. So he was a patient, and his mother was with him all the time. So she is a attendant. So BCCI must have paid all the expenditure regarding the Yuvraj Singh medical treatment and stay and travel expenditure of Yuvraj Singh and one attendant. So you can see in the footage which has been provided in the TV, etc., on the news, that only mother was with him because only one attendant expenditure can be bear by the employer. So that was a practical example of this outside India treatment of an employee. Okay. Rama Devi is saying, sir, GTI B, you write 116,000 instead of 160. My apologies. I am so sorry, Rama Devi. It should be 1,60,000. Very good. What is GTI's gross total income? You should have gone through what is the meaning of GTI in the basic concept chapter if you have taken the class. Okay, next is Monica, sir, in travel expenditure, we already considered 5,000 as taxable, which include in 25,000, but during GTI, we take 1 lakh or 95,000. Okay, let me see. What was that? Okay. Okay, this was, it should be 1,60,000. Okay, clear? Okay, so what somebody is asking, sir, in travel expenditure, we already considered 5,000 as taxable. Yes, because in case of traveling, RBI permit 1 lakh rupees, so taxable value is 5,000 rupees. Very correct. Now you are asking, which include in 25,000. Yes, 25,000. But during GTI, we take 1 lakh or 95,000. During GTI, we need to take 1 lakh because this 1 lakh has been exempted earlier. And the provision says if the GTI exceeding 2 lakh rupees, then those traveling expenditure which has been exempted earlier, understand, total traveling expenditure was 1,05,000, out of which 5,000 has been taxable. So those exempted was 1 lakh. So those exempted which has not been taxable earlier is going to be taxable again if your GTI exceed 2 lakh rupees. So 1 lakh is going to be taxable again. I hope it's clear. Okay, Ankur asking, limit is specified by the RBI is for whole family or each member. That will be given in question. As a family or as a member, that will be given in question. We need to consider it as it is given in question. Swati Pandit, 2 lakh amount related example explain. I just given you an example, Swati, of course. Devraj Sarji, please 10% translate in Hindi. Not possible, Devraj, because that's not permitted. I'll ask you that if you ask any query in Hindi, I will explain you that query in Hindi. Fine. Almas Sheikh is asking, okay. Simran Jot asking, sir, monetary salary different from salary? Yes. In salary, we consider monetary as well as non-monetary. But for the purpose of monetary, only we need to consider all monetary payment. And the non-monetary like perquisite, facilities, provident fund, etc., we need to remove it. Next is, when will the class schedule for November month will be available? I have told you my next class on day after tomorrow, and in that class I will explain you when the other classes will be telecasted. Otherwise, it must be on the portal. You should go and check. It will be there definitely. Okay, Almas asking once again, that is, we cannot explain again. You should go through the YouTube and scroll back and you can see as many times as you want, Almas. Okay. Perquisite means, now these kind of question is not good, Anirudh. Perquisite means we are discussing salary chapter from last 3 sessions. Today we have 4 sessions. I've explained each and everything, the meaning of perquisite, etc. You should go through the last lecture before asking these kind of questions. So please, it's a request. Do not ask these kind of questions, or do not ask question without watching the previous classes. Mohammed Suhail is saying, sir, please once more explain furnished house. Look, furnished house do not have any specific provision. It's very simple. For the purpose of furnished house, we need to find out the taxable value of unfurnished house first, as the provision in point number A. And in that taxable value of unfurnished house, we need to add the furniture value which has been provided by the employer. If that furniture has been provided by the employer, the 10% of original cost of that furniture is our taxable value. If it is on hire or rent, then the rental value is going to be added there. We will solve certain questions of taxable value of perquisite of rent-free house. In that, you will see how easy perquisite is this. Next is there any limit of attendant? It has been written only one attendant is allowed. Okay. Next is Swati, perk exempted in the hands of employee for medical expenditure will be same available as deduction for employer. If something is going to be exempted, then the deduction cannot be generally claimed. Mansi is asking, but in this perquisite, the deduction can be claimed because it's regarding the salary topic. So those certain is exempted in the hands of employee, the employer can claim deduction in his PGBP in respect of these perquisite or salary which has been given by him to the employee. Only those things has been disallowed which we are going to be discussed in our PGBP head, profit and gain of business and profession. But yes, those exempt in the hands of employee can be allowed as a business expenditure, not a deduction in section 80C. You will understand it in detail when we will take classes for PGBP chapter. Okay, profit and gains of business and profession. Next is Mansi saying, sir, I will complete all lecture today. I will try to complete those pending lectures. Sir, want to know that do you provide notes your own in BOS app? Yes, the notes has been uploaded by me on the BOS app and the portal also, Mansi. You should go through there, download that, and with the help of those notes, then attend the lectures. And I promise you, you will give you will have all the clarity, etc. regarding these salary topics. Okay, next is Manohar is asking, Sarji, suppose I have my own house. Okay, I supposed. Done. Next. And company also provide me rent accommodation. Very good. Then these perquisites get fully taxable or getting the exemption for the same. You will have these kind of taxability perquisite, whether you have own house or not, it does not matter. Because 15% of salary or 10% or 7.5% salary will be a taxable perquisite if you have a rent-free house from the company, whether you are living in your own house or not. If you are living in your own house, then the house rent allowance concept in that situation, you cannot have the exemption. But in perquisite, it does not matter that you have your own house or not. Yes, we will do the illustration. Do not worry. Swati, sir, please explain GTI example. I've already explained it. You can scroll back and again going to watch it. Next is Swati, I've answered that. Deval Gupta, sir, if furniture was provided from November, then we will change 10% on cost for 5 months, November, March. But what will charge for remaining 7 months, April to October? From April to October, you do not have furniture. So there is no taxability. Yes, if you do have the rent-free house, that only the rent-free house value for the 12 months will be taxable if it has been provided for the full year. But if the furniture has been provided for only 5 months, then only 5 months taxable value will be there. And there will be no treatment regarding furniture for the 7 months. Okay. Tushar in gratuity is asking, there's a provision of 15/26 MS explain. Tushar, it's a request from my side. Do not ask these kind of question. Please, please. You are doing chartered accountant course. Be sincere about the course. ऐसे नहीं होगा सीए. आपको पहले पुरानी lectures लेने हैं. You have to go through the old lectures. You have to take in those classes. I explained each and everything with the help of an example. These kind of questions interrupt our class. It actually break the flow. It actually makes me feel that The faculty is trying so hard to make you feel understand the provision. The institute is providing the free lectures. Kindly value them. So if even it's free, and if you think that because it's free, so it does not have any value, do not do this. I can promise you, the lectures, the faculty has been provided by the institute is better than any faculty, even from private coaching institute or etc. So please have some sincerity and please watch the previous lecture, then ask question. And I personally believe most of your doubts will be clear if you are going to watch the previous lecture first. Okay. Thank you, Tushar. Logic. I also explained the logic also before 15/26. I've also explained 4 Sundays has been excluded. So please do not ask these kind of questions. Next is Rachana, sir, is this mandatory to live in the house provided by the employer? In case no, should we pay the tax even if we do not utilize it? It's your choice. Why we will go to pay tax in the examination? The taxable value, we need to find it like this. So whether you lives in your house or not does not matter. If you are availing the benefit of rent-free house, either you can say no to the employer that I do not want any rent-free house. But if in the question it has been given that you have taken the facility of rent-free house and lives in your own residence, etc., it does not matter. The taxable value will be same as per the provision we discussed. Now, Tushar is saying, sir, I have gone through the lectures. That is wrong, Tushar. Again, you are saying these things. I have told you, I've explained that. Watch the lecture carefully. All students over here, we disturbed by your question, which is actually is not good for our lecture. So please do watch the classes and then ask. I've explained you. Okay, next. Sir, if I am living in my friend house, leaving, it should be living, I guess. And where I pay the electricity bill, does HRA will be provided to the employee? This is a wrong question. You are asking a wrong question. We does not care that you are getting HRA or not. If the HRA has been given in question, we should know how to solve the question. Fine. Next is, okay, Anamika is saying, good morning, sir. You explain all concept very clearly. Thank you so much, Anamika. Okay, so moving on further. Now the hotel provision regarding the rent-free house and simultaneously 2 or more rent-free house together. We are going to discuss these provisions. Now these are very, very simple. The third case was hotel rent-free house. So it's a very simple concept. It says that during transfer of your job, for example, you are working in Delhi and having a rent-free house. Clear? And now the job has been transferred to Mumbai. So employer is going to provide you a rent-free house over here also, but there is some time because employers say that I will provide you a rent-free house after 20 days because some other employee who occupied this rent-free house might be leaving after 20 days. So we will be able to provide a rent-free house after 20 days. So in this scenario, for the purpose of these 20 days, either the employer can say to the employee that you find your rent-free house wherever you want. Or in some situation, employer provides a hotel, guest house, etc. stay for these 20 days for temporary purpose. After that, you will get your rent-free house. So if you are getting any hotel stay or hotel room stay as a rent-free house for temporary purpose, in that case, the taxable value is very simple. It is fixed 24% of salary for the whole year. So whatever is your salary for the whole year, we need to take the 24% of that salary or hotel charges. Whichever is lower is your taxable value. Now might be, you must be thinking, why the salary for the whole year? So the concept says, first of all, you find the salary for the whole year. Then proportionate into number of days stay in the hotel. So you stay for 20 days in a hotel. So you have to take salary for the whole year. Suppose it's 10 lakh rupees. Then 20 upon 365, that value will be written over here, 24% of this value. So this value, and we need to take now the 24% of this value, that will become over here Hotel charges will be given in question and the lower will be your taxable value. So it's very simple. But there is an exemption if the stay is up to 15 days. Then this perquisite will be exempted. So if the hotel room stay is more than 15 days facility, then only it's going to be taxable. Otherwise, it's going to be exempted. But remember, in this example, the hotel room has been given for 20 days. So it's exceeding 15 days, but you cannot take only 5 days taxable perquisite. Once it exceeds 15 days, you have to take the full. Even if it's for 16 days, then we have to find the value for 16 days salary and then 24% of that amount. So up to 15 days, this is an exemption perquisite. Now we need to read those provisions with the help of our notes. So we can see that in the case of central state government, license fee or rent as per government will be your taxable value. In case of other, if house is owned by employer, 15% if population exceeding 25 lakh, 10% if population 10 to 25 lakh, 7.5% if other case, that means population is less than or up to 10 lakh. If it is on lease or rent, then population does not matter. In all cases, the provision is same, 15% of salary during which the house is occupied on rent, house is occupied or rent paid, whichever is lower. The rate is 15% same in all the cases if house is on lease or rent. What is the meaning of salary? We will discuss note number 1, 2, 3 later. First of all, we are going upon case number 3 regarding the hotel regarding the furnished house. So value of furnished provision say, first of all, find the taxable value as house is unfurnished. Whether you are a government employee as per case A or B. Then for owned furniture, add 10% of original cost, or for hired furniture, actual hiring charges. The hotel concept says 24% of salary paid or payable for the year, proportionate for number of days or actual charges. Nothing will be taxable if the accommodation is provided for a period not exceeding 15 days. So if the hotel stay benefit is providing for up to 15 days, then this perquisite will be exempted. There is nothing going to be taxable. The case number 5, that is accommodation in both cities simultaneously. We have to solve this. So our rent-free house concept will be complete. So why it happens that we should have 2 rent-free house? Why it's happening? The concept says, suppose there is Mr. A who is working in Lucknow and having a rent-free house over there. Suppose his salary is 50,000 per month. And this salary is for rent-free house salary. What is the meaning of rent-free house salary? I will discuss it later. So he's having a rent-free house, salary is 50,000 per month, and it's owned by employer. This is the information given as on 1st April 2023. Now Mr. A job has been transferred to Delhi from suppose 1st or we can say 31st August. From 1st of September 2023, he has been transferred to a job in Delhi, where also he is having a rent-free house has been provided. Salary, suppose same, there is no difference. But this is on rent. And the rent is 6,000 rupees per month. So now practically in some situation, it happens that if you have transferred to some other place, so you're having a rent-free house over here, but it's not easy to shift all your household appliances together when you are shifted from one place to another in case of job transfer. So practically it can be happen that if you are transferred to Delhi on 1st September, so now it will take time to shift your home appliances, your family from Lucknow to Delhi instantly. It might be that you asked your employer that I will shift my family after 2 months because my kids have examination, so they have to do examination in the school in Lucknow. So till that, I will continue my job in Delhi from 1st September, but my family will shift after 2 or 3 or 4 or 5 months. An employer says, okay. So in that situation, it might be possible that you are having two rent-free house at the same time. One is occupied by the family in the Lucknow and the other is occupied by yourself in Delhi. Suppose the Lucknow rent-free house vacated from 1st February 2024. So from 1st February, he vacated the Lucknow rent-free house. Then he has only one house that is in Delhi. So technically you can see that from April till August, April, May, June, July, August, for 5 months, he has only one rent-free house that is in Lucknow. From September till January, September, October, November, December, January, like this 5 months, he's having two rent-free house. One is in Lucknow and one it is in Delhi. Clear? And from February till March, these 2 months, he's now only having one rent-free house that is in Delhi. I hope it's clear. So the provision says if any employee having two or more rent-free house at the same time, two or more rent-free house at the same time, then for 90 days, technically for 3 months, for 90 days, only one, you are having two, but only one rent-free house will be taxable and one will remain exempt. Out of these two rent-free house, only one will be taxable and one will remain exempted. So which one will be taxable? The provisions say lower taxable value. We have to find it out. Out of these two rent-free houses, which one is having lower taxable value? That is going to be taxable. The higher taxable value will be exempted. And of course, after 3 months, for 3 months, you have to do this. After 3 months, like we are having two rent-free house at the same time. So for 3 months, lower will be taxable. And after 3 months, like remaining 2 months, both will be taxable. So department is providing you the benefit for 3 months. It says for 3 months, we will taxable only one rent-free house and which is having lower taxable value. But after 3 months, we are going to taxable both rent-free house for you. So if we solve this question, you can see from April to August for 5 months, only one is going to be taxable. It's owned by employer, 50,000 salary, and it's Lucknow. Population is more than 25 lakhs. So from April to August, 15% of salary is going to be taxable, which is 7,500 rupees per month into 5 months. This is taxable value for April to August. From now September to January for 3 months, the lower of both taxable value is going to be taxable. So we have to find out the taxable value for both houses. So for Lucknow, the taxable value we already find it out. That is 7,500 rupees per month. And now for Delhi, because it is on rent, so 15% of salary, 7,500 or rent paid, whichever is lower. That is 6,000. The rent paid by 6,000. So lower is 6,000 per month. So technically you can see that in case of both houses, the lower taxable value is Delhi rent-free house. So for 3 months, like from September till November, only one house is going to be taxable having the lowest value. So this 6,000 is going to be taxable for 3 months. That means 18,000. So one is this taxable value. Second taxable value is 18,000 after 3 months. Now both is going to be taxable. So the tax value of both houses will be taxable. The Lucknow tax value is 7,500 and the Delhi tax value is 6,000. For 2 months, both values going to be taxable. So the third taxable value is this. This is our first taxable value, second taxable value. Now this will our third taxable value. And now from February, only Delhi house remains. So for last 2 months, only Delhi house value is going to be taxable. So this is our fourth taxable value. Total of these 1, 2, and 3, 4th will your answer rent-free house taxable value for the year. So there is no new concept in this. You can see we are not solved any new provision in this. The concept just say a simple thing that if you are having two rent-free house at the same time, then for 3 months, only one of them is going to be taxable having the lower value. And for remaining time duration, both are going to be taxable. How to find the taxable value is the same concept like 15%, 7.5 or 10%. In case of rental, that is 15% or rent paid, whichever is low. So the concept is same. Just a step which says for certain time, one is taxable and for the remaining time, both are going to be taxable. So moving on to the provision regarding the case number 5, which says where on account of transfer from one place to another, employee has been provided a house at a new place of posting while retaining the house at other place, then the value shall be with reference to one house which has lower value for a period of 90 days. Thereafter, the value of both houses would be taxable. Now, the most important thing, this is the meaning of salary. This is very important. What is the meaning of salary? If you are able to find out the correct salary for the purpose of rent-free house, this perk will be very, very, very easy. The provision has been written on the notes, but I'm explaining you with a simple way. For the purpose of salary, for the purpose of rent-free house, the meaning of salary, it says all monetary payments. You should consider all monetary payments, and that will be your salary, except dearness allowance, which is not as per term, which is not per retirement benefits or not as per terms of employment. So we cannot take that DA portion which is not as per terms of employment. We have to exclude that. So we can only take that monetary DA which is as per terms of employment, and except DA, arrear of salary, and advance salary. So for the purpose of rent-free house, we are taking all monetary payments. DA is also a monetary payment, arrear of salary also monetary payment, advance salary is also a monetary payment. But for the purpose of rent-free house, we exclude or we do not consider DA, that is not as per terms of employment, or arrear of salary or advance salary. For example, if in a question, basic salary has been given 1 lakh, advance salary is 20,000, arrear of salary is 25,000, DA is 10,000, but 40% as per terms. Bonus 20,000, commission 5,000, taxable allowance 1,000. Any allowance taxable portion, any allowance taxable portion. Perquisites 50,000. And now we have to find the salary for the purpose of rent-free house. So for the purpose of rent-free house, we will take only monetary payments. We will take this. We cannot take advance salary, arrear of salary, because we can only take the salary for the time house is occupied by you and on due basis. So those salary which has not been due in the previous year, like advance or arrear, advance is not due in the current year. Arrear, which is due to retrospective effect, not the current year salary. We have to remove that. So we will only take 1 lakh. D only that part which is as per term. So we will take 4,000. We will take 1 lakh. We will take bonus. Yes. Full bonus value. We will take commission. Yes. As per percentage of turnover or not does not matter, because that is for HRA purpose. Commission 5,000 we will take. Taxable allowance, any taxable allowance, because these all are monetary taxable allowance. Perk we cannot take. So for the purpose of rent-free house, if in this question somebody asks what is the meaning of salary, we will take these value. This is 1,20,000, 24, 29. That means 1,30,000 will be my salary for the purpose of rent-free house calculation in this example. Okay. You will understand when we solve the question, of course. This note 1 exactly says the same. Salary includes all monetary payments. But in case of allowance, DA, only that part which is for retirement benefits. And advance salary and arrear of salary will not be included. Salary to be commuted on due basis for a period for which rental accommodation is occupied by the employee. So that was our rent-free house provision, but last note is there and it is very important. This rent-free house perk will be exempted if these two conditions has been fulfilled. The house is located in a remote area if the rent-free house has been provided to in a remote area. So you must have read the definition of remote area till now or not. So anybody knows the definition of meaning of remote area? It has been written over here. It's not rural area. Rural is different, remote is different. So if the rent-free house has been provided in a remote area, and which is the working site, where the employee is providing the duty exactly in that remote area in which you have been provided the rent-free house. In that situation, that rent-free house is not going to be taxable. Remote area means an area which is 40 kilometers away from a town having a population not exceeding 20,000. So remote area is kind of place which is very far from the city, having a population of not exceeding 20,000 from a city or a town. So because it is too far that you cannot commute on daily basis, so a house, temporary or whatever it is, provided there. Generally in case of mines, KGF2, KGF1, remember? So if somebody's need to work in KGF2 place or KGF1, so employee cannot communicate daily basis from your city till that site. So a place, a residential house will be provided at that site only. So technically that site residential house is for working. So because of that, without that residential house, working cannot be done smoothly. So that kind of rent-free house is exempted if they are satisfying two conditions. It is in remote area and working site. That is exempted. A general note which is applicable on all perquisite. All perquisite. Any amount recovered or received in respect of any perquisite, including rent-free house, will be reduced from the taxable value as calculated above. For example, the salary for rent-free house comes 1 lakh rupees and the taxable value is 15%. That is 15,000 rupees taxable value. But if in the question it has been given that for this rent-free house, employer charges 500 rupees per month from the employee. If it has been given in question that salary for the rent-free house purpose is 1 lakh and suppose 15% concept of taxable value is applicable. So taxable value is 15,000 in general cases. But if in the question it has been said that for the purpose of this rent-free house, employer charges 500 rupees per month from employee. So that means employee pays 6,000 rupees for this perquisite. So if any amount has been recovered from employee for any perquisite, that is always going to deduct from the taxable value of that particular perquisite. It is applicable on all perquisite, not only for rent-free house, but all perquisite we are going to study after this also. If anything is recovered from employee, that is going to be deducted from the value, taxable value. It's the same thing as somebody is offering that I will take to the movie, I will take you for the movie. The ticket is 500 rupees for free. Then what is the free value of ticket for you? That is 500 rupees because you are not going to pay anything. But if the offer change, if someone says, I will take you on a movie, the ticket is 500 rupees, but you have to pay 100 rupees only for the ticket. So now what is the benefit you are getting? Is it 500 or 400? Now the value is benefit is 400. If somebody is saying, I will take you for a movie, ticket is 500, but you have to pay 300 rupees for the ticket. So now the benefit is only for 200. So obvious, if something has been charged from you, that cannot be a perk for you. So if anything has been charged from employee in respect of any perquisite, that is going to be deducted from the taxable value of that perquisite. That was rent-free house. That's why I was saying it's very important for your examination because it has multiple provision. An examiner is definitely going to frame a provision regarding rent-free house if the salary question comes in the examination. So that was rent-free house perquisite. Let me take the queries, then we will move on to the short break. Okay, next is query is which one taken the population census? It has been written in the question. You students do not read the concept. As per 2001 census, you have to take the population. Okay, it will be given in question. Next is 15% of 50,000 into 5112 is the answer for one condition. Might be yes. Lavanya is asking, sir, taxable EPF also not considered for calculating salary in rent-free accommodation? Yes, you are absolutely right. Correct. This kind of queries actually should be asked. Not that kind of query, but some students are asking, sir, what is 15/26? Sir, what will become in examination? This kind of query you should not ask. This kind of query should ask. Lavanya is asking, taxable EPF also not consider? Yes, it will not consider because that is not form part of monetary payment. Let me show you students. Initially, in the starting provision, that was, I guess, just a second, salary part 1. In the salary part 1 provision, there was a format in starting regarding monetary and non-monetary. You can see this, right? So whenever you want to understand the concept of salary for the purpose of rent-free house, so we need to take only point number 1 till point number 6th point. They are only the monetary payments, 1 till 6. So for the purpose of rent-free house, you only take monetary payments from 1 to 6. You need not to deduct any standard deduction. You just need to total this. But out of these 6 points, we cannot take the advance salary. We cannot take the arrear of salary. And from the portion of allowance, from this portion of allowances, if there is dearness allowance, then we cannot take that part of dearness allowance that is not as per retirement benefits. So technically, if you want to understand the meaning of salary for the purpose of rent-free house, so this is rent-free house salary. You can take the total, you can deduct arrear of salary if in the question, you can deduct advance salary, and you can deduct DA as per, not as per term. If you're taking the total of this, you have to deduct these three, or you just take this, do not consider these, take this, take this, take this. Out of this allowance, only take that allowance which is as per terms of employment. Clear? So next query. Rachna Ramakant asking, sir, can an employee sublet these rent-free house? Yes, if employee can sublet these rent-free house, then our salary question will be unaffected. The same provision we will apply for that employee, but whatever income that employee is receiving from subletting, that will be taxable in his hand under house property or under income from other source. It will depend on that condition. So that will be a different circumstances. It can sublet, depend on the provision. But that subletting will not going to affect our taxable value of rent-free house in any situation. Next is, for exemption purpose, the employee can stay in one hotel 15 days and in another hotels 5 days. And it is an aggregate. And technically, you do not have choice in these cases. Employer provide you the hotel in which you have to stay for certain number of days. Fine. Manohar Yadav, Sirji, please elaborate the DA means. How many types of DA are there and what is the relevance for? Technically, DA is two types, as per retirement benefits and as per not as per retirement benefit. DA means dearness allowance. Hindi में उसे बोलते हैं महंगाई भत्ता. So generally in the question it will be given whether it's as per terms of employment or retirement benefit or not. What is exactly meaning of that? Generally it happens when you join any organization at the time of appointment, what DA has been decided at the time of appointment letter, that DA generally constitute DA as per terms of employment. For example, you are going to join a job and DA is that time has been provided to you at the time of appointment, 1000 per month. But after some time it increased to 1200. That increment will generally form part of DA, which is not as per terms of employment because it is increased later. For the purpose of examination, you do not need to understand the meaning of that. You should go for these kind of thing on the Google, etc. In the examination or in the question, it will be given in the question. I can explain you the meaning of also every term, but we do not have that time. We have to find the implication of provision, not the meaning of the provision. Fine. Next is, so in the GTI concept, can you please explain again what are included if income is more than 2 lakh? I can tell you in short, Harsh Singh. If the GTI exceed 2 lakh rupees, then the expenditure on travel, which is exempted, is going to be taxable, or you can add that into the GTI. So that new GTI will be our answer. So if your GTI is 2,10,000, suppose, and expenditure on travel is exempted by RBI is 40,000, then this 40,000 is going to be taxable again in that 2,10,000. So now new GTI will be 2,50,000. Okay, we have discussed that. So now we are going for a short break for 10 minutes, and when we will resume, we will have our story, which is in Hindi, of course. And after that, we will move on to our perquisite section. I remember that our MCQ is still left, and I assure you that before ending our class, we will take our MCQ sheet today only. Okay. So, Mr. Manish, can we go for a break? Okay, welcome back everyone. So I guess you might have your tea, coffee, and energy back for the remaining class because today we have very important topic in perquisite. We just completed one that is rent-free house, and the other is will be our car facility. And again, we will have that TPC, that one of the most difficult topic of salary also, which we need to cover today. And after that, I guess all the other provision are very simple. So the main topics were an important word like rent-free house, then car perquisite, and that question number illustration number 10, what we are going to discuss today. But before that, of course, our story time, and that is a very beautiful story today for all of you that might inspire you. और स्टोरी विल बी इन हिंदी एज ऑलवेज हैपेंस. सो बड़ी छोटी सी कहानी है. एक देश था, वहां का एक राजा था. वो राजा काफी एजेड हो गया था और बहुत रूड था, वेरी रूड. उसको अपनी बुराई सुनना पसंद नहीं था. तो उसने अपने सैनिकों को, अपने सोल्जर्स को बोला था कि कोई भी अगर राज्य में मेरी बुराई करता हुआ मिले तो पकड़ लाना. वो दो लोग सैनिक पकड़ के लेकर आए जो राजा की बुराई कर रहे थे. वो कह रहे थे राजा बहुत एजड हो गया है, बहुत रूड है. तो सैनिकों ने सुना और उन दोनों को पकड़कर राजा के सामने लेकर आए. राजा ने कहा कि जो मेरी बुराई करेगा उसको मैं फांसी पे लटका दूंगा, हैंग टिल डेथ. तो उन दोनों को फांसी की सजा दी गई और डिसाइड हुआ कि 7 दिन बाद, आफ्टर 7 days, दे विल बी हैंग टिल डेथ. अब दोनों को जब सजा हुई तो उनमें से जो एक था उसने रोना धोना शुरू कर दिया. वो जेल में बैठकर रोता रहता था, हमेशा परेशान रहता था कि अब मैं मरने वाला हूँ. अपनी फैमिली से मिलता था तो रोता था. तो इट वॉज ओनली 7 days लेफ्ट. जो दूसरा वाला था वो सोचता रहा 7 दिन तक. उसने सोचा कोई तरीका मिलता है, देखते हैं क्या होता है. ही वॉज पॉजिटिव ऑल द टाइम एंड उसे पता चला कि उस राजा का एक फेवरेट घोड़ा है, हॉर्स हॉर्स. और राजा उसे बहुत प्यार करता है और राजा चाहता है कि अपने मरने से पहले उसका घोड़ा उससे बात करना सीख जाए. कोई उसे बात करना सिखा दे, बोलना सिखा दे ह्यूमन लैंग्वेज में. तो जब 6th day आया, फांसी से एक दिन पहले, तो राजा ने दोनों को बुलाया और बोला कि क्या आखिरी ख्वाहिश है, वो लास्ट विश. तो जो बहुत दुखी रहा था एक हफ्ते से, उसने कहा मुझे ये खाना है, फैमिली से मिलना है, एटसेट्रा. और उसकी सारी ख्वाहिश राजा ने पूरी कर दी. बोला कल इसे फांसी पे लगा. दूसरे से पूछा तो उसने कहा कि मेरे को कुछ नहीं चाहिए, मेरे को बस एक दुख है कि मेरे पास जो एक टैलेंट है, मेरे पास जो एक कमाल की नॉलेज है, कमाल की स्किल है कि मैं जानवरों को बोलना सिखा सकता हूँ. वो मैं अब किसी को नहीं सिखा पाऊंगा क्योंकि मेरे मरने के बाद वो स्किल खत्म हो जाएगी. राजा ने कहा अच्छा, तुम जानवरों को बोलना सिखा सकते हो? उसने कहा हाँ. कहते ठीक है, मेरा एक घोड़ा है, उसे बोलना सिखाओ. उसने कहा सर, 1 साल लगेगा, 1 साल में मैं आपके घोड़े को बोलना सिखा दूंगा. राजा ने कहा अगर 1 साल तक नहीं सिखाया तो फिर मैं 1 साल बाद तुम्हें फांसी दे दूँ. उसने कहा ओके डन. लेकिन उसने कहा 1 साल से पहले कोई, आप मुझसे ट्रेलर नहीं मांगोगे, आप नहीं कहोगे कि बोल के थोड़ा दिखाओ, 1 साल बाद ही सब कुछ बोलेगा. तो राजा ने कहा ठीक है. अब टाइम स्टार्ट हुआ और उस पर्सन ने घोड़े को बोलना सिखाने की प्रैक्टिस शुरू करी. वो पूरे टाइम घोड़े की साथ रहता था, उसको ट्रेन करता था बोलने के लिए, उसकी हेल्थ का ध्यान रखता था, प्रॉपर केयर टेकिंग करता था. और राजा अपने महल से, अपने रूम से देखता रहता था कि वो सच में ऐसा कुछ कर भी रहा है कि नहीं. धीरे धीरे कर 1 साल खत्म होने वाला था. लास्ट डे था कल. और आज एक दिन पहले जो एक सैनिक था, वहां का एक सोल्जर, उसे पता चल गया कि इसको ये स्किल नहीं आती. तो उसे पता चला तो उसने उससे पूछा कि तुमने राजा को झूठ क्यों बोला, वाई यू लाइड टू किंग, बिकॉज तुम तो अभी मर जाओगे कल, बिकॉज तुम्हें तो ये आता ही नहीं है सिखाना. उसने कहा हाँ, मैं जानता हूँ मुझे नहीं सिखाना आता और मुझे पता है कि घोड़ा कल नहीं बोलेगा. बट ऐसा कर कर मैंने अपनी लाइफ को बचाने के 4 ऑप्शन बना लिए. ऑप्शन 1, मुझे लगा था हो सकता है राजा 1 साल में मर जाए. तो अगर राजा 1 साल में मर गया तो मेरी सजा खत्म हो जाएगी, बिकॉज उसका जो राजा का सन था वो बहुत ही होशियार था, वो इतना रूड और सन की नहीं था. तो इस बात की सजा वो माफ कर देगा. तो मेरे को ऑप्शन लगा कि 1 साल में हो सकता है राजा मर जाए तो मैं बच जाऊं. दूसरा, हो सकता है मैं ही मर जाऊं, नेचुरल डेथ हो जाए तो ये फांसी वाली टेंशन मुझे ना हो, तो मैं इस सजा से बच जाऊं. तीसरा, हो सकता है घोड़ा मर जाए. ऐसा हो गया तो भी मैं बच जाऊंगा, मैं बोल दूंगा मैंने सिखाया था लेकिन वो मर गए। और चौथा कहता है नन ऑफ द अबव, मतलब कुछ और हो सकता है, अदर्स माइंड भी कुछ और हो जाए। लेकिन ऑफ कोर्स साथ जब लास्ट डे आया, नेक्स्ट डे, तो राजा ने कहा बोलना सिखाओ। तो उसने पूरी कोशिश करी कि हॉर्स बोले, लेकिन हॉर्स नहीं बोला। तो वो जानता था उसे फांसी मिलेगी। लेकिन राजा को ये लगा, क्योंकि राजा ने पूरी 1 साल वॉच किया था कि वो कोशिश कर रहा है कि नहीं। तो राजा को बड़ा प्राउड फील हुआ और उसे सच में ऐसा लगा कि इसको सच में ये स्किल आती है, लेकिन शायद मेरे घोड़े में ही प्रॉब्लम है। माइट भी वही बेवकूफ है जो नहीं सीख पा रहा। तो राजा ने कहा मैंने पूरा 1 साल वॉच किया और मैंने देखा कि तुमने पूरी कोशिश करी, लेकिन शायद मेरे घोड़े में ही प्रॉब्लम, तो इसीलिए मैं तुम्हारी सजा माफ कर दूं। इट शोज कि एवरी टाइम यू हैव टू बी ऑप्टिमिस्टिक, यू हैव टू बी पॉजिटिव। फ्यूचर में प्रॉब्लम्स हो सकती हैं, लेकिन आपको हमेशा तैयार रहना चाहिए। लाइक फॉर रीजन, इवन इफ somebody is thinking right now that examination in May and we are not prepared for it, might be you will not be able to clear it, still you should not stop your best. You should start working at your best. You have to give your time, your uh, for studies, how much you can sacrifice, how much hard work you can put, you should put from right now. You never know, you might be able to complete all your courses, all your classes, and might be going to crack the examinations. So do not be negative, you have to be positive. Whatever you have, you just try to use all those skills. Even if in some situation I have seen that when what happened when students going for give examination and their first paper is very bad, they might think that we are not able to clear the first paper, so we won't give the next examination, next papers. That is very bad approach. Even if you are not able, you know that your examination is very bad, you might not able to get the passing marks in the first paper, still you should give your all other papers with that focus, with that enthusiasm as you are going to give in normal cases. Do not quit. Do not be absent in the examination, because it will give you some kind of experience, even if you're not able to clear, and might be you able to clear. I have seen in my like practical life, my staff, my articles, my friends, those actually left the other examination after their first paper, that they might not able to clear it, but they got 40, 41, 42 marks in that paper. And then after that they were thinking, oh my god, we should give the examination, might be we're able to clear that. So you should never stop your best, you should always try that, and you never know what is in the destiny. So it, God also favors the brave or the people who actually work hard. So please learn from this story that always be positive, use your skills, never quit, and might be things will be in your favor, you never know. Fine, that was a story for all of you. Now we are moving on to our provisions. So we have completed rent-free house. Now we are moving on to car perquisite. Taxability of motor car. It says that if employer is providing you transport allowance or conveyance allowance, so we have the provision regarding that in the allowance portion. But what if employer is providing you a car facility? In that case, rule number 3 and sub rule number 2 will be applicable. That will explain how the taxability of car perquisite need to be done in this scenario. So there's multiple cases regarding the car facility. One by one, we are discussing it with the help of a diagram. I have already uploaded the notes also regarding this. The chart presentation has been uploaded. So you can download that notes also, and that will be really helpful for you to understand the provision of these kind of complicated concepts like rent-free house, like medical perquisite, like car perquisite we are going to have. So car facility. So there will be two scenarios. Whether this car is owned by employee and this car is owned or maintained by employer. So the car you are using might be owned by employer or might be owned by employee. So if the car is owned by employee, then in that situation, the expenses on petrol, diesel, etc., which is used for commuting from office to house and house to office. So the expenses of that car, running and maintenance expenses of car, expenses paid by. Because car is owned by employee, so there is no perquisite of car because car is our car. So in this scenario, the car is not going to be a taxable perquisite, but the expenses paid by either employee himself for commuting or paid by employer. The expenses of car maintenance, petrol, etc., either paid by employee himself. So car is of employee, and if expenses is paid by employee, in that scenario, the taxable value will be nil. Technically, there is no perquisite. We can say not applicable case of perquisite because there is nothing we receiving from the employer. Car is our expenses also bear by us. So in that scenario, there is no per, because in the per case, there must be something we are receiving from the employer for the purpose of personal purpose. That will be technically a perquisite. So in this situation, there is no taxability. So if car is owned by employee and expenses paid by employee, there is no taxability. But if car is owned by employee and expenses paid by employer, then there will be three situations. And this kind of perquisite is taxable for all employees, whether you are a specified employee or whether you are non-specified employee. Clear? This perquisite in which car is owned by employer and provided to, this is only taxable for specified employees. So now we should understand that because car is owned by employer and expenses paid by employees, so what can be taxed if expenses paid by employer? The expenses portion we need to taxable. There are three situations. First one is car is 100% used for official purpose. That means that employee only use the car to commute from office to residence and residence to office. No personal purpose involved. So if any perk which has been used only for official purpose, the taxability will be always nil. No taxability if it is 100% for official purpose. If 100% for personal or private purpose, it will be given in question. So if in the question it has been given that the car has been used only for personal purpose, that means employee does not use that car at all for official purpose. He just used his car or his family used his car and expenses paid by employer, and that expenses has been used only for his personal or private purpose. In this case, taxable value will be expenses paid by employer. That will be given in question. For example, in question it has been given that 10,000 rupees per month has been paid by employer for the car. So for the year, it's 1,20,000. And if the question says it's used 100% for official purpose, then nothing is going to be taxable out of that 1,20,000. And if it says it has been used only for private purpose, then full 1,20,000 is going to be taxable in this scenario. Now the third case, it says if the car has been used for both purpose, it's private as well as official purpose. It's practically in a scenario, we can say that yes, this third condition is applicable in most of the situation, because generally it does not happen that you are using the car only for official or only for private. It might be varied, 20% private, 80% official, or vice versa. Whatever is the percentage, we will apply case number 3. If it is used for both purpose, it will be also given in the question. So if it is used for both purpose, then how we need to solve it? Total expenses paid by employer. That will be given in question. We need to reduce some amount out of this. Less. It says deduct actual expenses for official purpose. Look, 10,000 rupees per month. So you are receiving 1,20,000 in a year. So that 120 will be over here technically. This one. Out of that 1,20,000, how much expenses you used for official purpose? If that is given in question, if it is given in question, it's not necessary that this value will be given in question. Not necessary. Fine. So if it is given in question, so this was expenses paid by employer and actual expenses for official purpose if given in question, then we will write this value in inner side. But this value need to be compared with another value which is fixed by government. So this actual expenses for official, if given, take that value and now compare that value to this value. And this value says if CC capacity, that is cubic capacity of car, is up to 1600 cc. If the car cubic capacity is 1600 cc, it will be given in question, do not worry. If the car up to 1600 cc, yeah, 1.6 liter, 1.6 liter or 1600 cc, same thing. Then we will take fixed 1800 rupees per month. If more than 1600 cc, then we will take 2400 rupees per month. This is a fixed government value. Plus, if driver or chauffeur is also provided by the employer, if driver provided, then 900 rupees per month for his salary. It will be added either into this 2400. These are mutually exclusive cases. That means either the car CC up to 1600 cc, then we will take 1800, or it will exceed 1600 cc, then we will take 2400. One of them will be selected. If it is up to 1600 cc and driver also provided, then we will take 1800 plus 900. If more than 1600 cc and driver also provided, then we will take 2400 and 900. If no driver, then either we will take 1800 or 2400. So out of these two, one will be selected plus 900 if driver there. And their total. So one total was official expenses as given in the question, if any. And one will be this value, 1800 plus 900 or 2400 plus 900. And if no driver, then 1800 per month or 2400 rupees per month. So out of these two value, whichever is higher, remember whichever is higher, that is going to be reduced from this above value. For example, for full year, the value is 1,20,000, which has been paid by employer. Official expenses given in question, suppose official expenses given in question, suppose 90,000. And suppose the car is more than 1600 cc and driver also there. Then 2400 plus 900, that means 3300 per month. Into 12, that will come 39,600, I guess. Yes, 39,600. So my value is 39,600. So total expenses paid by employer, this one, this fixed value has been given in question. This we have taken as per the information given, whichever is higher, this is 90,000. So 90,000 will be deducted from 120. Taxable value will be 30,000. It's quite complicated or quite confusing, but when we will solve the numerical, these are easy. in 90% cases, let me tell you, 90% cases, this official expenses value not given. So if it is not given, then whatever we will receive from point number 2, this 33,900, this can be reduced from the total value. So if it is given, then we will take higher. Otherwise, whatever will come with these value, that is going to be deducted from the total actual expenses paid by employer. Balance will be your taxable value. I hope it's clear. And I hope it's, even if it's not clear, then I promise when we will solve the numerical, you will find that these are really, really easy. So that was the scenario what we were discussing. When the car facility, when the car is owned by employee and expenses paid by employee, then it's not a taxable value. If it's paid by employer, used for official purpose, always nil. Used for private purpose, full taxable, 100%. If it is used for both, then we have to take total expenses paid by employer first. Then we need to deduct the higher of these two values, 0.1 or 0.2. 0.1 is actual expenditure of official purpose if given in question. 0.2 have some specific value fixed by government. 1600 cc, 1800 per month, 1800. If more than 600 cc, 2400 per month. If driver has been given, then add 900 rupees per month as driver salary. Out of these two, whichever is higher is going to be deducted. Balance is my taxable value. That was the case when car is owned by the employee. Now we are moving on to the other part, which says, what if car is owned or maintained by the employer? Again, we have two cases. Now car has been excuse me. Now car has been owned or maintained by the employer. And now we need to see who is paying the expenses. Now expenses of car either paid by employee or paid by employer. So suppose if expenses made by employee, then what we have as a perquisite, expense or car. So if expenses bear by employee, that means the perk what we have, that can be a car, because car is of employer. So whatever is employer is providing, that can be a perk. So in first scenario, you can see when the car is owned by employee and expenses paid by employee, so nothing has been paid by employer, so there is no taxability. But when car is employee and expenses paid by employer, then we are only taxable the expenses portion as a taxable perquisite. Now in this case, because car is owned by employer and expenses paid by employee, so what is the taxable thing? What is a perquisite? That is car. Again, there are three situations now. That's why car perk little confusing, because it's a multiple cases. If it is 100% for official, expenses paid by you, but you use the car 100% for official purpose, so there will be no perk, taxable value nil. If it is 100% for private purpose, now understand, if the car is used for 100% private purpose, expenses paid by employee, but car is of employer, then the car value is going to be taxable. And it's two situation again. I know it's complicated, but relax. When we will solve the question, it's not that complicated. So the provision says either car is owned by employer. Exactly same provision as in case of furniture I have told you in case of rent-free house. Car is also a movable asset and furniture were also movable assets. So what are the conditions to be taxability? If car is owned by employer and you use that car for 100% private purpose, then taxable value will be 10% per annum, exactly same as per furniture provision of original cost of car. That is your taxable value, 10% of original cost of car. And if it was on rent, employer does not own that car. He provide you that car on hire. Then of course, the rent charges paid by employer will be taxable value. Clear? If it is used for both purpose, Then we have a fixed taxable value. Now we have a fixed taxable value up to 1600 cc. It's 600 rupees per month. This is taxable value. You need not to deduct it or reduce it from any value. This is going to be taxable. If more than 1600 cc, then it's 900 rupees per month. And if driver, 900 rupees per month. Clear? So now this value is a special character. This is fixed. So this is fixed taxable value. That means this is prescribed by government. So this we cannot reduce from any value. This is going to be taxable fixed. If this scenario is applicable, then this value is going to be taxable fixed. Why I'm saying it's fixed? Because in rent-free house case, I have explained you a general note that was saying if for any perquisite, any amount has paid by employee or any amount has been recovered from employee, that is going to be reduced from the taxable value of perquisite. But in this case, there are two fixed cases in car cases. This is going to be fixed case, taxable value, even amount recovered from employee. In car facility, there are two scenarios in which you cannot reduce anything from that because that's a government fixed value. Even if you recovered some amount from employee, but for this taxability, you cannot reduce any amount from this taxable value. One case was this, first fixed case. Second will come later. Now, in the last case, when car is owned by employer and expenses also paid by employer, so there is coming the huge taxability provision because car is owned by employer and expenses also paid by employer. So we have both benefit. As an employee, we are receiving car as well as expenses from the employer only. So now in this situation, if it is 100% official, again, it's always nil. If it's 100% private, so now we are getting both things, two things, which is used for private purpose, car plus expenses. So for the purpose of expenses, all expenses paid by employer value will be my tax value, plus we need to add the car value also. Again, same provision for car value from here. If it is owned, then 10%, same provision per annum. If it's on rent, then rent charges. So if you are receiving car as well as expenses paid by employer and you are using it 100% for private purpose, then we have to tax the car 10% or rental value as the case may be, and all the expenses paid by employer. We need to add both these values, car and expenses. That is my taxable value. Clear? Now the last case, if it is used both purpose. If it is both, then again we have a taxable value fixed provision. The same taxable value which we have reduced from here. Exactly same amount is here. What we used for reduction purpose over here is going to be taxable there. The same concept. So you need not to revise the limit again. Taxable value, if up to 1600 cc, 1800 per month. More than 1600 cc, 2400 per month. If driver, 900 rupees per month. And again, these value, whatever it will come, that is fixed value. So this is fixed value case number 2. Once this taxable, you cannot reduce anything from it. Now let me tell you, you might feeling it's a difficult diagram. It's very huge. Of course, it's huge because the multiple provisions are there. But let me tell you how to solve this question in the examination. You just need to find one thing in the examination. Technically, you need to find three things. First one, who owned car? The second one, who paid expense? And the third one, use of car. You need to find these three things. That's it. If the car is owned by employee, then you need to understand which case will be applicable. The first case is applicable if car is owned by employee. In that, you need to check whether expense met by employee or employer. If it is met by employee, no perquisite. If it is met by employer, then you need to check it's official, always nil. If it is private, full taxable. If it is for both, then total amount less official expense actual value if given in question, or a fixed value which is 1800, 2400 and plus 900. These need to be deducted from the total actual payment by the employer. Balance will be your taxable value. If car is owned by employer, you should now understand if car is owned by employer, then you need to forget the first case. Now we need to check expenses either met by employee or employer. If it is met by employee, then we just need to taxable the car value, and car is an asset. So it's either 10% of cost or rent is going to be taxable. If it is for both purpose, 100% of private. If it's for official, no taxability. If it's for both, we have a fixed limit. You have to learn it 600, 900 plus 900 fixed value. If car and expenses both bear by employer, then official nil taxable. If it is 100% private, then taxable the full car value, 10% or rent, and total expenses. Add both, we will have our taxable value. And if for both purpose, then 1800, 2400 plus 900. That's our fixed second value, which is going to be taxable. I believe that it is quite confusing, but I also promise you, when we will solve the question, you will find it very, very, very easy. So we have the whole provision regarding this car facility. If you have any confusion regarding any limit, if that is not clear, then you can see from this table, it has been given all provision over here. Months mean completed months. If it is question, it is given, the car has been provided you for 10 months and 20 days. We have only solved the question of 10 months. The days will be ignored. One car, when more than one motor car is provided. Now, this is a case which says when there is more than one motor car has been provided. So if there is more than one motor car has been provided, the situation says one car, anyone taxable as used for both private or official, others car as only for private purpose. So if the employer provide you 3 cars, then only one car we will taxable, assuming that it is for used for official and personal both purpose, and all other 2 cars will be taxable, assuming that they are only for private purpose use. I will make an example for this kind of question and I will provide you. In next session, we will discuss that. Next, valuation of benefit of provisions for domestic servant. Now the perquisite provisions are very, very simple. Only one provision or 2 are a little important, or you can say little have numerical treatment. Others are very, very simple. If you have appointed any domestic servant for your housework and your salary of that domestic servant is paid by employer, then it's a perquisite and it's going to be taxable in your hand. If you appointed that and paid by employer, it's taxable for all employees. And if employer appointed that and paid the payment made by the employer, then it's taxable in the hands of a specified employee only. You can read these provisions. These are no numerical treatment. Valuation of gas, electricity, or water supplied by employer. So the circumstances says if payment is made to agency supplying of gas, electricity, etc. For example, you are in a bank organization and your employer said your electricity bill will be paid by the bank. So in that scenario, whatever is the electricity bill paid by the employer, that will be your taxable value, simple. But suppose if you are working in a electricity company, you are an employee of an electricity company, And then they say, we will provide you some units free of cost. In that case, whatever is the manufacturing cost per unit is going to be taxable. So if your employer is providing you gas, water, or electricity, and he is not the manufacturer of that product, then in that case, whatever amount paid by the employer to the outside agency is the taxable value. If he made supply these things from his own resources, that is only possible when you are working in an electricity company or a gas company or water department. In that case, if they provide you these things free, then manufacturing cost per unit will be the taxable value. Valuation of free or concessional education facility. So one was the education allowance. Now we are talking about the education facility. That means your children are studying in some school or colleges and your employer said, we will pay the school fees. That is called education facility. Now there will be two scenarios again. If that school or organization is owned by the employer, in that case, the taxable value will be the fees charged by the similar kind of institutions from other schools, like the market value of the fees. And if it is not so, if that school is not owned by the employer, in that case, the amount paid by the employer as a fees is going to be taxable perquisite. Like this is an important point, so you should read it. And it says very simple provisions are there, but there is a benefit of 1,000 rupees per month per child advantage. If the educational institution is maintained and owned by the employer, if free education facilities are allowed to any other education institution by reason of its being an employment of that employer, cost of such education in a similar institution or near the locality, however, there would be no perk if the cost of such education or the value of such benefit per child does not exceed 1,000 rupees per month. So up to 1,000 rupees per month, this perk is exempted if the school is owned or maintained by the employer. But if it is not owned or maintained by the employer and the fees is supposed 1,200 rupees per month, then full value is going to be taxable value. In this situation, if it is 1,200 rupees per month, 1,000 rupees per month per child exempted, 200 rupees per month will be taxable value. A simple provision, you can read it. If there's any confusion, I am here, do not worry. Next, free concessional ticket. If any kind of ticket of going somewhere on a journey, etc., provided free by the employer, in that case, that is going to be taxable value. The value which has been paid by the employer, that is going to be taxable value. So other than like car facility, whatever perquisite we are discussing, there's a universal rule. Whatever is the value paid by the employer or the market value of that perquisite, if paid by the employer, that is going to be taxable. Clear? Interest-free or concessional loan. Yes, this is also important, and for examination purpose, question can be asked from it. Like for example, if your employer provide you a free interest-free loan, for example, you need a loan, an employer said, I will give you 10 lakh rupees loan, interest free. So that is also a perquisite for you because you are getting a benefit of not paying any interest. If you will take this loan from a bank, etc., that means you need to pay the interest. But now you are getting loan without paying any interest, so that interest will be your perquisite part. For example, we need to find out the perquisite value and the value of interest rate, the market rate interest we will take from SBI interest rate. That will be given in question. So if SBI is charging 10% for this loan and your employer is charging 0%, then 10% of that loan value will be your taxable value. That means 1 lakh rupees is taxable value. For example, employer says SBI rate is 10% and I will charge only 4%. That means the benefit is now for us for 6%. So now 6% of this 10 lakh will be the taxable value. So whatever interest we need not to pay in comparison with only the SBI rate, if any other bank rate has been given, we should skip it. We should only compare it with the SBI rate. Then the difference of that value, what we are not paying as an interest, is going to be taxable value for the purpose of this perquisite. But it's not that simple. We have a very special provision regarding it. Let's read this. The value of the benefit to the assessee resulting from the provision of interest-free or concessional loan for any purpose made available to employee or any member of his household during the relevant previous year by the employer or any person of his behalf shall be determined as the sum equal to the interest computed at the rate charged per annum by the State Bank of India. As on the first day of relevant previous year in respect of the loans for the same purpose advanced by it on the maximum outstanding monthly balance. This is very important line. Maximum outstanding monthly balance as reduced by the interest, if any, actually paid by him or any such member of his household. However, no value would be charged if such loans are made available for medical treatment. So if the loan is for medical treatment in respect of prescribed disease like cancer, tuberculosis, etc., then this perquisite will be exempted. Or if it is other than medical purpose, other than any medical purpose, but up to only rupees 20,000, the loan value is not more than 20,000, then it is exempted. So up to 20,000 for any reason, exempted. If it's for health reason, any amount will be taxable as perquisite. For cancer purpose, employer provide 10 lakh rupees interest-free loan, no taxability. Other than health issue, if provided for 10,000, 15,000 or up to 20,000, then again no taxability in a year. So if it exceeds 20,000, then the taxable value is going to be find out. So we have a very special example regarding it. I need to discuss that example today only. So you will be able to understand that this perquisite is really, really very, very interesting. So on your perk regarding the rent-free house question, the motor car, we will discuss each and every one. Do not worry. Interest-free per question. Has been given on page number 3.96. You study page number 3.96. Okay. So the question says, point number 6 of the question, like this point. We're just discussing point number 6. Housing loan 6% per annum. Amount outstanding on 1st April 2023 is rupees 6 lakh. Shri Bala pays 12,000 per month toward principal on 5th of each month. So technically we took the loan on 1st April 23, 6 lakh rupees and rate of interest is 6%. SBI rate is given in the question is 10%. So benefit is for 4% only. SBI rate is 10%. So benefit is 4%. And 6 lakh rupees loan, out of which 12,000 per month toward principal, he pay on the 5th day of each month. We need to find out the balance at the end of each month for the whole previous year. Now see, he is paying on every 5th of the month, 12,000 rupees installment towards the principal amount. So the loan was 6 lakh rupees. So we have a solution technique. What we need to find out the closing balance at the end of each month. So because 6 lakh rupees loan and 12,000 rupees installment paid at 5th of every month. So loan taken on 1st April 2023. That means on April 5th, 23 paid 12,000. So at the end of the April, we have 5,88,000 principal amount. So we have taken 5,88,000. Now 5,88,000 benefit is 4% perquisite because we have taken the loan at the rate of 6%. So 4% and 1 month taxable value of interest. If we will find it out, it will come 1960. Clear? Then at the end of May, it will be 5,76,000, that is reduced by 12,000. Then 5,64,000. So one by one, we have to calculate it. So one by one, we have to calculate it for full year, each month interest taxable value. So we have to calculate this interest 12 times. It will take a lot of time because we have to calculate. And if any one of interest has been mistakenly wrong, then this answer will be wrong. So this is the taxable value for each month. So we have to calculate interest for 12 times. I have a shortcut and a better method for it. You have taken, you need not to calculate this value like this. We can do it like this. Find out the balance at the end of each month like this. This is very simple. We have to deduct 12,000 from each value. So at the end of the year, we have now these 12 closing balances. Aggregate this full value, it will come 62,64,000. And now what we can do, we can solve this taxable value in a single solution. 62,64,000, 4% and 1 month value. So we just aggregate the total outstanding value. What we are doing over here, we are finding the interest at the end of each outstanding balance. We can solve it like this also. Find the aggregate of total value and then apply 1 month interest value on it. It will come 20,880. It will help you to only calculate one time interest value irrespective of 12 calculation. Because in the both method, you have to find these value 12 times. But in this method, you have to find these value 12 times. So it might be that you might be taking a wrong calculation, and that single wrong calculation will make this answer invalid and you will lose your marks. So better aggregate this whole value and calculate 1 month interest value on the aggregate value. The answer will remain the same. So that is a shortcut way to solve this. And it's a mathematics. You can solve it in either way, not an issue. So that was the perquisite provision, what we were discussing. Moving on to our notes. We have left with traveling, touring, accommodation. It's very simple. 5 minutes provision. Again, this is 2-3 minute provision. Credit card provision, club expenditure, mobile, particular. Okay, this is not more than 20-25 minutes provision left. Then deduction, and then we will left with the relief provision and the MCQ and the other part we have left. So let me take the query. Then see. Good story. Okay. Brilliant teaching. Thank you so much. Nagaraju ji is asking, sir, in second case, employer owned car, personal use, then 10% cost plus if he provide driver, then 900 per month, correct, no, sir? No. If the car has been used only for private purpose, then 10% of car we will take. And if even driver has been provided, then the actual salary of driver you can add 900 rupees per month or 600, etc. can only be used if it is used for both purpose. So if the driver has been provided and the expenses of driver has been paid by the employer, then the actual salary of driver you need to add, not that 900 concept. The 900, 600, 1800, etc. they have fixed cases. Only if the car has been used for both purpose, only in that situation that fixed value can come into the action. Otherwise, you cannot add 900, 600. If the information of driver salary is not given, we cannot add that. Okay. Okay. So we have now we have a MCQ. Okay, fine. We are discussing MCQ, and I'll upload the MCQ provision on the portal. Only 5 MCQs we need to discuss today. And these are very, very simple. This is for your practice also. If you will solve them, you will understand the provisions, that those are not that difficult as we feel when we actually going to study the theoretical provision. First MCQ is a teacher receive remuneration for setting paper for question examination. What is the chargeability position of this remuneration? Choose the most appropriate answer. The correct answer will be B, that is income under the head income from other source. Fine. Pawan employed in Magic Limited was eligible for transport allowance of 2,000 per month to meet his travel expense from residence to office. He actually incurred 1,200 rupees per month towards travel. The amount of travel allowance chargeable to tax as a perquisite would be. Okay, answer this question. I am waiting for your answer. It's a question regarding transport allowance. So you need to tell me the travel allowance, transport allowance, which is going to be taxable perquisite. Question number 2. Kindly send me the correct answer of question number 2. Let's see how many of you know the correct answer. The correct answer of question number 2 is A, 24,000, because transport allowance deduction is available only to a physically handicapped person, that is 3,200 rupees per month. But for other, it is full taxable. There is no benefit in respect of transport allowance. So 2,000 into 12, that is 24,000 is going to be taxable. Sahil, an employee of XYZ Limited, received 25,000 per month as basic salary. In addition, he gets 15,000 per month as DNS allowance and 80 rupees per month as for 3 children each. 80 rupees per month for 3 children each. That means 80, 80, 80 as education allowance. His gross salary will be how much? You need to take the basic salary full value, the DA full value, and just taxable education allowance. You need to find it out. If you're able to find the correct education allowance taxability, you will be able to solve the question. What is the correct answer of this question? The correct answer of this question is option number D. 25,000 into 12, then 15,000 into 12. That will be 4,80,000. Out of these 3 children, only 2 can claim the exemption. So 80 rupees of a third child is going to be taxable into 12. That is 960 rupees. So 480,960 is the correct answer. Question number 4 and 5. That is the same question I have given in my notes in respect of leave encashment. In case of leave encashment, there was 2 examples I have noted under the notes I have provided, in which I have asked you to calculate the days, that is leave on minus ke leave avail. In one case, it was 376 days. In the second, I guess it was 300 days. So now in these example, you need to find the total exempted value or taxable value. In that example, I just asked you to find the days. Example question number 4 and question 5. They both are the same question, but you need to calculate the exact leave encashment taxable value. Let me tell you the answer. Question number 4 correct answer is B, and question number 5 correct answer is C. So kindly calculate that, and if there is any issue, any problem, you can ask me, I can solve it for you. Now we have left with only one concept which I was planned that we should complete today. That was this provident fund example. This one, that is PC upon 2 into R, or we can do one thing because we're already short of time. It's already 9:52. You might need to go somewhere. So we will take this question in the starting of our next session. First, we will complete this illustration number 10 with the provision, and then we will proceed for the further questions. So in the last session, we will cover this. We will cover our small perquisite. We have a question regarding relief, the topic regarding relief that we will discuss, and we will have our test your knowledge 6 question, and the remaining question we have left in our study material topic. So be prepared for the next class. It's going to be a roller coaster ride for all of you. And it's a suggestion and advice from my side to all of you that please revise the provision. Please revise the provision before the class, before our last class. Please revise the full provision before our last class, because that will really help me and as well as you to understand the provision, because you have a lot of numerical to solve on that day. So it's my quotation for all of you. I always say revise twice. That's my advice to make you wise. If you revise your provision, that will really help you to understand the provision for your examination and for every time. So please have a good day, study very hard, and we will meet day after tomorrow on 9th of November with our last salary session. So if there's any query, you can send me or you can ask me on 9th of November. So Mr. Manish, can we